How long do you expect this annualized outperformance that has been there for the last 25 years? I mean, your numbers show that PE funds return 13% annualized versus the S&P 500, which is more like 9%. How long can that continue?
It's a great question, and private equity isn't a monolithic strategy, although it certainly appears to be one, right? Private equity is made up of thousands of different managers that are raising funds of different sizes. And so one of the things we observe at Cambridge Associates is that the opportunity for outperformance versus, say, a public market index is going to be maintained for the foreseeable future, because individual teams acquire control of companies, and it's what they do to unlock the value in those companies that can create that outperformance. And so the dispersion of return around that 13% return that you mentioned is enormous, and we do expect that to continue.
And digging into performance a little bit, internal rate of return is one of the metrics that's often cited, but it can be a bit tricky. Can you walk us through how it can be gamed and how often that happens?
Internal rate of return, yes. So internal rate of return is a time-weighted and dollar-weighted rate of return. And so it plays out over different varying periods of time. And so there are certain things one can do to improve that number, including perhaps having an exit earlier than expected. That can obviously increase your weight of your return. The other thing that's been happening in the private equity arena is the use of commitment facilities. And so commitment facilities are a way to call capital, but not from your investors, and then call capital from them later. And by
so what you borrow ahead of actually accessing their cash.
Exactly, exactly. So it's a way of increasing the headline number, that IRR that you're mentioning, Hema. But the reality is, as we think about it at Cambridge Associates, what are you hiring that manager for? You're hiring them to acquire a company and unlock the value, not to use a little bit of leverage at the top and increase and boost that rate of return.
I'm glad you bring up leverage, because a long time ago, private equity was known as leveraged buyouts back in the 80s when they wrote Barbarians at the Gate and the RJR Nabisco story really came out. How important, how critical are low interest rates to private equity? Because for a while, it looked like interest rates were going to start heading higher. And I don't know if that changes the scope of the industry entirely, or it can continue regardless.
That's a great question. And with interest rates trending lower, and maybe even lower for longer, that's really unlocked a lot of leverage and availability of leverage, including covenant light or no covenant leverage, that really does enable private equity to acquire these companies and really borrow quite a bit against the value of that company. And so it's not an accident that with interest rates trending lower, that purchase price multiples, the valuation, the average valuation of private equity companies trading has actually risen to all-time highs and has been hovering at all-time highs for the last couple of years. So leverage does play a big role. When I say that, the average leverage of a private equity-owned company is trending around 6 times debt to EBITDA, which is the normal approach and measuring stick that we use, versus most, I think, public indices might register a 3 times debt to EBITDA amount. So it is definitely more leverage, but it's not that public markets have no leverage, right?
And so these are private, illiquid assets. How do you go about valuation, given it's not like a stock that trades every single day? What are some of the issues surrounding that aspect of it?
Yeah, when you acquire a private company, it's private. There may be public comparables, which are often used as one measure of trying to determine valuation. There are private market comparables that you have to find, right? There's the classic discounted cash flow analysis. There's sum of the parts. All of these different valuation methodologies are usually employed and then navigated to see which valuation between the 4 seems to make the most sense. But make no mistake, the public market comparables, the companies that are trading on public indices, those often create a bit of an anchor for, you're often talking about private market valuations in context against public market ones. But it's not the only form of measurement for valuing.
Now, I remember back just before the financial crisis, 2007, 2008, certainly in Europe, there was a lot of hand-wringing about private equity, a lot of hand-wringing about the leverage being put on infrastructure assets in particular, and the backlash against all these people making all these money. The backlash is back once again from a political standpoint. We potentially see Elizabeth Warren touting how maybe things won't be quite so easy to make big returns, particularly if companies are driven to the brink, to the edge, leveraged up, maybe going bankrupt. How do you see the environment changing for private equity to the upside or the downside?
Well, I think what's really interesting in the current market environment is, you mentioned returns are at 13%. Against the field of other investable options, that's standing quite tall and attracting a lot of attention, right? And as more and more public investors, public equity investors go more passive, they're looking for an active form of return, and they're turning to the private equity markets and arenas. And so that's creating more attention to private equity. There's also more transparency in private equity since the global financial crisis. Private equity investors are expecting and getting a lot more transparency, and therefore private equity is becoming much more publicly available, which is creating a lot more attention to it. It's going to be very interesting through the next year to see what exactly is going to happen as we continue down the election calendar year, to see what other dialogues are started in the markets on private equity.